Why are Walmart, Target, Elon Musk, and oil prices all pointing towards a potential recession in 2024? Let's dive into the key concerns raised by these entities and explore the implications for the economy and stock market. First off, Walmart's CEO, Doug McMillon, recently made a significant statement suggesting the possibility of deflation during the holiday season. This is a rare occurrence as deflation is uncommon, with prices generally expected to rise over time. The focus on deflation, especially in essential categories like groceries, raises eyebrows and indicates a shift from the prevalent inflation concerns. Gas prices, monitored by AAA, have been on a downward trend, currently averaging around $3.33 per gallon. Despite geopolitical conflicts in the Middle East, prices have dropped, challenging conventional expectations. The decline in oil prices, with WTI dropping about 11% in the past month, is noteworthy. Gas prices, usually slower to decrease than increase, might continue to fall in the coming months. Target, a retail giant, has experienced 2 consecutive quarters of negative revenue, a rarity for the company. This trend suggests a potential downturn in consumer spending, raising questions about the broader economic landscape. The possibility of a 4th consecutive quarter of negative revenue in Q1 2024 adds uncertainty to Target's outlook. Elon Musk, the CEO of Tesla, expressed concerns about macroeconomics, interest rates, and the overall economic landscape during a recent conference call. Musk's apprehensions, coupled with references to the 2008 financial crisis, indicate a cautious stance. His worries about the economy and consumer behavior contribute to the overall narrative of economic challenges ahead. Now, let's break down these concerns and analyze the factors influencing each scenario. Deflation, as mentioned by Walmart's CEO, could have various implications. While lower prices benefit consumers, they might signal weak demand and economic uncertainty. The unusual occurrence of deflation raises questions about the underlying health of the economy. Decreasing gas prices, despite geopolitical tensions, can be attributed to the drop in WTI oil prices. This dynamic, while seemingly positive for consumers, might indicate concerns about global economic activity. The unexpected decline in oil prices could be a response to anticipated lower demand, reflecting broader economic uncertainties. Target's consecutive quarters of negative revenue highlight challenges in the retail sector. The company faces both internal and external pressures, including negative controversies and the impact of inflation on consumer spending. The potential for a 4th consecutive quarter of negative revenue raises concerns about the overall health of the retail industry. Elon Musk's persistent focus on macroeconomics and interest rates indicates a level of caution about the economic environment. The CEO's historical success and recent challenges, such as the acquisition of Twitter, contribute to a complex narrative. Musk's worries about the economy may reflect broader anxieties among business leaders. Gas prices trending downward may seem positive for consumers, but it raises questions about the energy sector and potential global economic headwinds. The slow response of gas stations to decrease prices compared to increasing them adds another layer of complexity to the economic landscape. Examining these factors, it becomes clear that there are both bullish and bearish indicators for the economy in 2024. Factors like lower gas prices and potential deflation may provide relief to consumers, but concerns about negative revenues for major retailers and Elon Musk's apprehensions paint a more cautious picture. Now, let's turn our attention to a potential stock opportunity for 2024, Bath & Body Works. Despite being in a challenging position, the company presents an interesting case. With a forward PE under 10, the stock is attractively valued. The focus on smaller ticket purchases, like soaps and candles, aligns with potential consumer spending patterns in 2024. The balance sheet remains a concern for Bath & Body Works, but if the company can navigate its financial challenges, it could be well positioned for a rebound. The potential for a rotation into riskier plays and smaller caps further supports the idea that overlooked stocks like Bath & Body Works might find favor in the coming months. As everyday Americans, how do you perceive the current economic indicators? Are you adjusting your spending habits or investment strategies based on these signals? In conclusion, the confluence of factors from major retailers, business leaders, and economic indicators suggests a nuanced economic outlook for 2024. The potential for both bullish and bearish scenarios requires careful consideration for investors. Bath & Body Works, despite its challenges, presents an intriguing opportunity, reflecting the evolving landscape of potential winners in the stock market. Disclaimer: the opinions expressed in this content are for informational purposes only and should not be considered as financial advice. Investing in stocks involves risks, and individuals should conduct their own research and seek professional advice if needed.
Before you go, help us by smashing that YouTube like button. And subscribe to this channel, so you won't miss any of our videos. This shows YouTube algorithm that you value our information. And it helps us spread the message. Sharing is caring.